When you decide to dip your toe into investing in stocks, it can be rather intimidating. There is a lot to keep in mind, not to mention the possibility of money loss. All of the information within this article can help you choose a wise investment and turn a profit. Before investing with a broker, investigate online to see what their reputation is like. Knowing their background will help you avoid being the victim of fraud. Set small, reachable goals when you first start investing. Contrary to those myths that you may have heard of, the vast majority of people are not becoming rich overnight in the stock market. You need to be involved in low-risk, manageable stocks that you can easily control. Keep this in mind, play it safe, and avoid these costly investing mistakes. Be sure that you have a number of different investments. You don't want to have all of your eggs in a single basket. If you only invest in one company and it loses value or goes bankrupt, you stand a chance of losing everything. Be prepared with a high-yield investment account stocked with 6 months of your salary that you can use in case of an unexpected problem with your finances. The idea here, of course, is that should you ever need emergency funding, you can break into this fund and hopefully get by without depleting it. Or, should you really need it on an extended basis, at least the money will be there. Never invest too much of your capital fund in one stock. Following this advice will limit your risk if the stock should tank. Don't think of stocks as something abstract. Think of them as money invested in a company. Take time to analyze financial statements and evaluate the weaknesses and strengths of the business to assess your stock's value. This will ensure that you consider each trade carefully before making any moves. A basic index fund provides returns that typically match the 10% annual market average. If you intend to pick individual stocks, you want to select ones that offer better returns than this. In order to calculate your possible return from a stock, you want to add together the dividend yield and the projected growth rate. A stock whose earnings are growing at 12% that also yields 2% in dividends offers you a potential return of 14%. For example, always look over your portfolio and investing goals every couple of months. The reason for this is that the economy is constantly changing. Some companies might fold, while others will do well. The best financial instruments to invest in may vary from year to year. Therefore, you should make sure you know your portfolio very well and adjust when you need to. This article can offer you many ways to get your start into the stock market. Keep in mind the fact that you need to do thorough research and stay calm the entire time. Read the advice in this article to make the best profits possible. Please check out the link below in description to explore amazing stock market tricks.